Are you guys ready to learn about the KPIs that you need to track? Well, keep watching. What's up, guys? My name is Andrew. I'm a serial entrepreneur, software engineer, and a junk removal business owner. I started a junk removal business as a stepping stone to return to my passion of technology and apps. I invite you guys to stick around, hang out, follow me on my journey from becoming a junk removal business titan to building a $1 billion home services app, and that is true. I want to talk about the live virtual junk event followed by the in-person event. This will be a live streaming event that's on my YouTube channel. This is not just going to be any junk removal event. This is going to be the junk removal event of the century, of the decade. Dispatch will be going in beta, so this is going to be a software announcement to let you guys know the software's out, talk about the software, why we're different than everybody else, and why I'm so excited to bring this junk removal software to you guys. It is going to be the CRM, FSM that changes everything. It's going to help you grow, manage, and scale your business. I am very excited to share this software, but what I want to talk about, what else is in this event, guys, is I'm going to be dropping some insane content in this event. It might be just as good as my course, if not better. And I really don't want to stress enough, guys, that you make the live virtual event, because if you make the live virtual event, you are eligible for the giveaway and all of the goodies that I'm going to be giving away. A lot of stuff. One of the things I'm going to be giving away is a brand new dump trailer. Somewhere between $10,000 and $15,000 brand new dump trailer, and we're going to give it away live. This is not a sales pitch course. There's nothing to sell. Everything is gonna be given for free. And of course, my software, there will be a free trial and all that stuff too. But all the goodies and content, the dump trailer, possibly a truck, for free. No catches, no gimmicks, no nothing. I won't announce the speakers just yet. I'll wait till we get closer. The live event will probably take around 12 p.m. and then the live event will probably be around 4 or 5 p.m. in person in Los Angeles, close to me, where we can all mingle for a few hours, get to know each other, talk, discuss strategies, and just shoot the shit. I hope tons of you make it to the live virtual event, and if you happen to be close by somewhere in California, I hope you make the in-person event. I'm thinking this is going to change the home services industry completely, but definitely the junk removal industry. I am very passionate about junk removal because I have been doing it, so this is very close to my heart. So I am going to disrupt the junk removal industry. So please register for the live event so you can be notified, you can get updates, and you don't miss it. It is going to be incredible. All right, guys, I get this question a lot in my Discord channel, and I got this question on a live yesterday, the other day with Ricardo when we went live. Somebody asked, hey Andrew, how do I figure out numbers and finances and taxes and just learn all this stuff? And honestly, I am by means no expert at all. I've been around the block with multiple businesses, taxes, and just kind of learning the basics of this stuff. I feel like I have an okay grasp, so I have to preface this with, what is that classic? You'll see all the YouTubers who give finance advice. I'm not a financial advisor, but this is what I do and what I've learned. I could be wrong, I could be right, but this is what I've learned. So I gotta put that I'm not a financial advisor little saying to protect myself. So guys, we're gonna kind of start from the top. We're gonna start with some accounting and then work our way down to KPIs. And if you guys don't know what KPIs are, this is something all businesses, as they start to grow, have to start doing. KPIs, key performance indicators. When I ran a tech business, there were certain things you would have to measure. Daily active users, monthly active users, weekly active users, lifetime value of a customer. There's all kinds of KPIs, and every business is different. For example, Facebook. A Facebook KPI would be, how long does the user keep the app open? How many times do they come back a day? Do you think Expedia has, the Expedia mobile app has the same KPIs? They don't give a fuck if you come back every day and how long you stay on it. They probably have different KPIs, like how many tickets per customer per year. So every business has certain KPIs that are important. We're gonna obviously be talking about junk removal. We're gonna kind of fuck up the feng shui, guys, but whatever. So we're gonna go over KPIs, key performance indicators, but we are going to start with the basics and probably cover some accounting stuff. So bear with me. Accounting 101, guys. If you plan on truly turning this into a business, do this from day one. We all know, or should know, or maybe actually not we all know, sorry, I shouldn't assume, but in the accounting world, you have three very important financial statements, is what they are called. You have a balance sheet, you have a income statement, which most people know as a P&L, your profit and loss statement. So you know what I meant, P&L, and then we have our cash flow statement. Now, we are not gonna go over these. They kind of describe exactly what they are. Balance sheets, assets and liabilities, income statement, P&L is your profit and loss. And generally speaking, you know, you do this monthly. I log my P&L every day. So I have a daily P&L, I call it, and that's actually, watch this video here. You can go get my P&L here for free. Actually, I give away all my shit for free, guys. Everything's for free. But most people, most businesses, they have their monthly P&Ls, and at the end of the year, they have their yearly P&L. You have your cash flow statement, which is the cash flow. Now, I'm gonna tell you the truth. I don't know how to do these. I don't like them. They're annoying. I use a service called bench.co, or simply you can get an accountant or you can get a CPA. Accountant could be a CPA, but you can get a bookkeeper, which will be cheaper than a CPA, and they can do all this stuff for you. Actually, you should have a CPA all the time, but you don't want to have a CPA do the tedious stuff like bookkeeping. A CPA will help you save money on taxes and what's the right thing to do, a certified public accountant. But like I said, we're not going to go too much detail with all of this stuff, but a P&L, try to have a monthly P&L, try to have a balance sheet too. Just know your assets and liabilities. If you're not financing a lot of stuff, in the beginning, you don't have like 20 dumpsters, you don't have 10 dump trucks. This probably isn't as important, you know, but you do want to track your assets and liabilities. You're racking up credit cards, all that stuff. Now you know the 3 financial statements that is required from every business, especially when you go public. If you go public on the stock market, at the end of the year, Apple, Verizon, it doesn't matter what company they're required by law to be a publicly traded company to release their balance statement, their income statement, and their cash flow statement, so that you, the general public, can make an informed decision on if you're going to invest in Apple stock. These are a good idea to get into. Now let's talk about EBITDA. It's annoying. It's actually not even required to be on financial statements. It's just something accountants have come up with that gives you a good idea of how the business is operating. What EBITDA is earnings, sales, revenue, before interest, taxes, depreciation, and amortization. We're not going to talk too much about depreciation. Most of you know what depreciation is, but I don't want to get into depreciation and amortization because it is a little above my pay grade. I know it in my mind. I don't know it well enough that I'm confident to explain it and teach it, but depreciation on vehicles and properties. I am going to explain why EBITDA is important, why it gives you an okay measure on the operations of your business. So the reason why the before interest, tax, depreciation, amortization, why the interest is excluded is because this depends on your financing structure, not on your current operational performance. Taxes are excluded because that depends on the geography you work on, not on your current operational performance. Depreciation and amortization are excluded because that depends on historical investments you made, not on your current operational performance. So this tells you more on how a business is operating, not based on the interest, not based on the taxes or your historical investments with depreciation and amortization. It kind of gives you a high level overview of the business's operational performance. That's the number they're trying to get from EBITDA. I hope that EBITDA explanation gives you a good idea. We'll do my EBITDA at the end of the video. What up, guys? Just want to make sure you're still paying attention. And if you are and you like what you're seeing, please comment down below, like, subscribe. It really helps me out. Please comment, like, subscribe. Anyways, back to the video. So I figured I might as well just start at the very basics. And we're going to kind of run through an example with my company. I'm not going to get my exact numbers because if you want to see the breakdown of my 1 million that I did last year, watch this video here. But it was like 1,059,000 and all that stuff. But we're going to go through some basic accounting terms and then we're going to run into the KPIs. So let's start with, I did 1,059,000, but for the sake of math and simplicity, we're going to do $1 million last year. So let's jump into all the annoying accounting terms. So we have gross revenue / sales / revenue. You might hear somebody say my sales last year, my revenue last year, my gross revenue, all the same shit. I want to preface this one more time, guys. This is from my understanding. I did do a little double checking to make sure that I didn't get these wrong, but like I said, I know there might be a lot of people out there way smarter with accounting and financing. Feel free to correct me down below if I am wrong on any of this, but this gets me through the day. From what I've learned, it's working so far, I think. So I did 1 million gross revenue, 1 million in sales. Cool vanity metric, doesn't mean shit. We're gonna get to that in a minute. So let's get to the next one, which is gross profit. Gross profit is your sales or your gross revenue, your revenue. You're gonna take sales minus COGS. We're gonna get into COGS in a minute. We're gonna talk about COGS and junk removal. We're just gonna do my numbers really quick and we're gonna get to COGS next. So if we take sales minus cost of goods sold, that leaves me, my COGS were 450,000. So that leaves me with 550K gross profit. So I guess naturally, let's go over what COGS is. Cost of goods sold. If you're a t-shirt printing company, it would be the t-shirts, the ink, the screen printing, digital printing if you do digital printing, the laborers actually doing the printing, and junk removal. Our COGS are going to be labor associated on the truck. If you have administrative office workers, call center people, you don't include those. Just the labor associated with the cost of goods. Our cost of goods is junk removal. So we have labor, fuel, and dump. I'm gonna tell you what my COGS were. They were, as I just went over, 450K. And I'm gonna tell you what I believe is the industry standard in terms of percentage. So if you were to add up your revenue for the month or for the year, it would average out to, my labor was 25% of my sales. Fuel expenses will account for about 3 to 5%. And then your dump fees will account for 8 to 12%. This is how you get your COGS. Now, something I just want to mention is, and you could Google this too, this is something that could be debated because it could be included in COGS, but credit card fees. Most people and most companies that are public put their credit card fees into SG&A or OPEX. We're gonna get into that next. COGS. So if you were to take, for example, $100,000 a month and your payroll was $25,000, your fuel was $5,000, and your dump fees were $10,000, 45% of your revenue was COGS. Your labor might be 20%, your labor might be 30%, your labor might be nothing because it's just you. So your COGS may be a lot lower than my COGS, but my COGS was 45%. Man, my handwriting is horrible. 45%. That is how you calculate COGS. Let's go into the next one. Let's talk about what we call selling, general, and administrative expenses, also known as OPEX, also known as operating expenses. So you can call it SGA, you'll see that term in the accounting world. You'll see OPEX, which means operating expenses. This could all be the same shit. In our world, we'll call it operating expenses, you can call it SGA, you can call it OPEX, whatever you want to call it. But we have our sales and marketing expenses under here, sales and marketing expenses. We have our salaries and wages, and then we have, of course, admin expenses. Admin expenses will be everything in between. Software, rent, insurance, everything else would go under admin expense. Sales and marketing, salary and wages, admin expense. This is your good old SGA and OPEX. We got our gross revenue, which got our gross profit. We took our gross profit, which was sales minus COGS, and then we calculated our SGA. Oh, let me give you my SGA. So sales and marketing, you guys ready for this? $300,000. Salaries and wages for my call center, $12K. Miscellaneous admin expenses, $38K. Total, $350K. So that brings us to our operating income, guys. Okay, guys, now to get our operating income is gross profit, which we already got our gross profit, which was gross revenue minus COGS. Now we're gonna take our gross profit, which we've already subtracted the COGS. Now we're just gonna take out the OPEX, okay? My OPEX is, so 550K minus 350K. So 550K minus 350K equals, ding, 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 200K. There's my operating income. And then if you guys want to get down to the nitty gritty, your net is going to be your op income minus taxes and interest. So that is how you get your net income. Op income is the number that most people talk about. Hey, after expenses and all that stuff, I made 200K. And then most people, you know, I'll try to start deducting as much more shit as I can, home office, whatever. And then you got to pay good old Uncle Sam. You got your net income, and that sucks. I hope that helps with understanding the basics of accounting and financing. Like I said, guys, I'm not a professional. I just got a couple questions and I figured, you know, maybe I could help a little. I am by no means nowhere near an accountant, but I know the basics to survive and have my CPA at least pass on the basics to the CPA and get good advice from a CPA, but it's good to know the basics. What I strongly suggest you do is just go watch a couple of videos on what I just talked about and learn the actual details behind it and learn from somebody smarter than me when it comes to accounting stuff. Are you guys still paying attention? If you are, please, guys, comment for the algorithm, like, subscribe if you like what you're seeing. It lets me know that you like everything. Back to the video. Moving on from accounting, let's go on to some KPIs, guys. KPI number one, guys. I'm assuming most of you junkers out there know this KPI, and this is the most basic one that is good to know. You just need to know this because it'll give you an indication of how much you can spend on advertising, because you know how much you're bringing back. So it really helps determine how much can I spend on a Google customer, how much can I spend on a Facebook customer, and knowing your average job size. Also, you can kind of predict the future. So you can be like, okay, my average job size is this. I know in the summer this might happen. You can kind of use the average job size to help you out with trends and ad spend. Very simple formula, guys. It is sales, gross revenue for the month, revenue, divided by jobs. We'll use one of my better months as an example. Makes it simple. We will use the $100,000 a month in gross revenue. I average 200 to 250 jobs. So 100K divided by 250 jobs that month. I track it daily because my P&L allows me to. I've customized and made my own P&L, but I never take weekly, daily, bi-weekly numbers serious in anything in junk removal. It has to be by the month. Take your numbers at the end of the month, run them. Junk removal is an ebb and a flow business. It is an ebb and a flow. There is no consistency, at least for me in residential. If you have commercial contracts that are consistent, but it's ebbs and flows. You take your monthly data. So 100K for the month divided by 250, that is an average job size of $400, average job size. JRA has a video from a long time ago. I think they said the national average was 350, but that video was like 3-5 years ago. I want to say this is somewhere around the average. I have months where it's 450 to 500. I had months where I'm like 390. I'd say I average around 450 average job size. Try to get it as high as you can, guys. Upsells, increasing your prices. You want to be between 400 and 500 average job size. That is what you want to shoot for, because that is what the big players are getting. And if that's what the big players are getting, you guys can get that. CPL. We're going to talk about CPL next. Cost per lead. Most likely you're going to be paying for leads, okay? So if you're not paying for leads, this won't be relevant to you, but Google's a great example. If you don't know much about Google, go watch one of my Google videos here or here, but you pay with Google Ads or Google Local Services. Google Local Services, you pay per phone call. Google Ads, you pay per click. How it works with Google Ads is if you're doing it correctly, you will have set up a campaign and people will click. They'll go to your website or your landing page. They'll click. You'll pay $10 to $20 per click. Let me give you what my averages are. My CPL is $55. Expensive as hell. Sucks. That means every lead that I get from Google is costing me $55. But how Google charges is CPC, cost per click. Depending on the keyword, junk removal, furniture removal, hoarder clean out, house clean out, who knows what the hell people type in Google, you're paying per click. You average it out through the month and you do the same thing. You average out for the month of your Google data. You don't ever take daily, weekly, bi-weekly. You run it for a whole month. You take your month of data and you run these numbers. You want to see what your average cost per click is between all your keywords. Let's just say each click, to make this easier math, we're going to do 50, but in reality, it's 55. For me, I know some people in different states are getting 30 to 35. Google Local Services is costing me $60 to $80. It just depends on a phone call. But cost per click, guys, so every time somebody clicks on one of your ads on Google Ads, it costs $10 to $20 cost per click. You can get cheaper clicks. You can. You could run the cheap game and it could work. You'll just won't show up as frequently. You'll show up on the bottom. When you have higher bidders paying more per click, they're going to show up more frequently. In this $50 example, what this means, if you're tracking your conversions, tracking email leads, so they go to your landing page, they click the phone call button, you're tracking it, they fill out the email form, they're tracking it. That means on average, it takes 5 clicks, $10 a click, $50 for 5 clicks. In Google, it's a conversion, but the technical term, at the end of the day, when you get that conversion, that's your cost per lead. You got 5 clicks and you finally got a fucking lead. Can you believe it? You had to pay $50. On average, clicks are costing me 15 bucks. 3 clicks is 45, so anywhere between 3 and 4 clicks on my landing page gets me a phone call, a conversion, cost per lead. Now, why we're talking about this, okay, is because we're going to get into CAC now. Quick intermission. Are you still watching? Please comment, like, subscribe. It really helps me out if you just hit the like button, subscribe, comment, ask a question, something. Anyways, back to the video. CAC is most important when you're running Yelp, Facebook, and Google Ads, because CAC is very important when you're spending big money, right? You need to know if it makes sense. How do we get our CAC? So we're gonna use an example of my ads. And we're gonna do CAC for Google Ads only. You can actually take your CAC for Google Ads, your CAC for Facebook ads, your CAC for Yelp ads, then you can compile all of them and get your average. But I strongly suggest doing your CAC for each. Let's say we're busting out 20 racks, 20 motherfucking racks a month on Google Ads, okay? $20,000 ad spend divided by 50, cost per lead, divided by $50 CPL. So after 1 month of running ads, we do the math, we find this out, and then we can measure if our ads are doing good. So that got us 400 leads. Now this is where shit gets crazy, guys. And this is why tracking is so important. You have to track with a separate phone number and a landing page. And if you send them to your website, you can still do that too, but you gotta be a little more sophisticated. You just gotta make sure you separate Google traffic coming to your website versus SEO traffic. That's why most people do landing pages, to keep it simple and 100% guaranteed you know the lead is coming from Google. It's the best way to track and measure performance. So 400 leads. I don't close all 400 leads, you know? 80% are gonna be phone calls, 20% of these are gonna be emails. We call the emails right away. I usually close 50 to 60% of my leads. Nobody's ever gonna close as good as you, because you care about your company, you're fun on the phone, you're awesome, you can give deals, however, you can sell yourself. But obviously when you scale and you hire other people, you know, you have to expect that sales won't be as good as you start getting further away from your own company, but you make up for it in more sales because you're scaling. This is something else you wanna track, is you wanna track how many of them you closed. This is why CallRail is so important. I do this. It's in my resources section. We closed 200 clients. Let's run the math. We know our average job size, don't we? We ran the numbers. If we were to do the same ad spend next month, we can kind of predict how much we might make. But we all know in junk removal, it ebb and flows. This gives you an average, but you get big jobs, you get small jobs, you get giant jobs. So for these 200 clients, if our average job size was $400, that means we made 80,000. Now, if our average job size was 500, we'd have 100 grand, right guys? Are you guys still paying attention? If you are, please like, comment, or subscribe if you like what you're seeing. Back to the video. Now, we could finally get into CAC and why CAC is so important. Customer acquisition cost. One of the most important numbers when it comes to any business is how much does it cost you to acquire a customer and how much will you make from them later, immediately and later. CAC is going to be sales and marketing, sales plus marketing, divided by new customers. Now, don't mess this up. Don't add up all your customers. This is where tracking is important. Don't pull in your accidental Facebook leads. Don't pull in repeats and referrals. Don't pull in anybody else except new customers from this ad source. So, sales and marketing, you're the one manning the phones. You spent 20 grand on ads. So the only marketing expense for this CAC is going to be the $20,000, okay? So let's do the math. We put 20,000 into Google Ads. We are going to divide by 200 new clients. This is why it is so important that you track your Google Ads data, because this number will become obscured or messed up, and you do not want that number to get fucked up, because then you'll think you're making a certain amount of money from your Google Ads, but you're not. So what is our CAC, guys? Our CAC is, with all of this, $20,000 into Google Ads, 400 leads, 200 new customers. We take the 20K divided by 100 new customers equals a $100 CAC. Bada boom, bada bang. So now we have our CAC. We know it costs us $100 to get in front of a customer. From the moment that phone rings, to you selling it, to closing it, to showing up and acquiring a new customer and doing the job, it has cost you $100. This has actually been a long debate across many videos and many companies on why would I get out of my bed to go to a single item removal for X amount of dollars, 99, because you've lost money at that point. Let's say you do a $99 or even $150. Let's say it's $150 minimum to go get a fridge. You send your 2 guys out to get a fridge, you've lost money, because by the time this $50 is gone, by the time you pay your laborers to go drive there, your gas, your wear and tear on the vehicle, your dump fees, you've lost money. And this is a whole debate on Google customer acquisition costs and single item removals. At the end of the day, guys, you got to do it. You're going to get that customer in your database. You can market to them later down the road. You get the exposure in their neighborhood. You can ask to put a yard sign in their yard for a small discount, $10 off. You get the ability for the potential, for a repeat down the road. They liked your personality. You gave them great customer service. They might refer you. So the benefits long-term outweigh the loss of money. And it keeps your guys busy. You get a little extra money in the bank to offset the CAC. But we're not going to talk too much about that, guys. So as you can see, what the cost per lead was, the cost per lead was $50. The CAC is 100. The CAC's 100 because if your close rate is 50%, it takes 2 leads for you to actually get in front of the customer. So imagine if it took 5 leads, So as you can tell, lead quality is important. Lead quality and how much you're spending, all this matters, guys. But at the end of the day, if you know your CAC, and you know your average job size, so if we take our AJS of 400 and our CAC of 100, let's take our 400 average job size minus COGS. So my COGS, if you remember, were 45%, okay? So that's $180. That leaves us with $220. We subtract the CAC, subtract the $100 CAC, that leaves us with $220 minus 100. We are at 120. So if you take this number, guys, the 120, you multiply it right there by the amount of new customers that you did that month, you get 24K. If you remember, guys, we brought in 80K in total, right? So minus the CAC, minus the COGS, we brought in 24K, 80K gross, 24K gross profit or whatever. Basically, as you can see, if you were able to scale and pump more money into Google Ads, you know exactly where you would land. By the way, guys, this is the shitty thing about Google Ads is, as you can see, if you don't have your business COGS down, you don't have your sales down, and if you don't have good ads and you're not good on the phone and you're not closing and your average job size is low, if you're in this CAC area, you can see why it gets expensive to play this game. But this is why you need to know this, okay? And you could do the same CAC for Yelp, track a phone number with Yelp, do the same thing, track CAC with Facebook, and you could figure out your CAC for everything. And then you know where you should pour money. I want to get on one more thing, because this is not where it ends. It doesn't end. I did a video with Xavier a few months ago, okay? Right here, check out this video. And we talk about another metric. We talk about another key performance indicator, a very important one that's really hard to measure in this business. And I'm in tech, so for the next KPI I'm about to tell you about is incredibly easy to calculate in tech. And it's an astronomical number compared to junk removal. We're gonna talk about LTV, lifetime value. Okay, this is a very important metric in the tech world. Imagine Netflix's lifetime value. I can't tell you how they measure it, but I will tell you this. If it is $15 a month, they can average out, okay, over the lifetime of this customer, on average, based on the data we have, and the churn is how many people cancel, like 10% of our customers cancel every month, 10% every year, whatever. $15, let's just say they stay subscribed for 60 months on average. They know they will get $900 lifetime value from a Netflix customer. Here's the thing, if it takes you 5 years to get $900, you're thinking very long term. Imagine it costs, the customer acquisition cost of a Netflix customer was $450. That's worth it, right? I mean, we don't know their COGS, but we know in the tech world, margins are a lot higher than in the home service world. Technically, this is probably worth it. But the problem is $450 to acquire one customer and you have to wait 5 years. The math is there, but you need the capital to afford, which is why, this is another tangent, which is why when you get to Series A, Series B, Series C, honestly, Series B and Series C, they're just giving you money to pump into the CAC. At the end of the day, yes, make the product better, but it is to go worldwide and double down on the CAC because they have figured out the LTV. I talk about CAC and LTV more in the video with Xavier, where we get the ratios of CAC and LTV, but in junk removal, it's hard to say because how often is a customer going to use you? And there's things you can do, guys. I've thought of so many cool, incredible ideas of like how to get more repeats and referrals, and I haven't implemented them yet, and I'll explain why later. But guys, with that in mind, if your average job size is $400 and they use you 2 times a year, 2 times in their lifetime, and this is up to you. Do you want to do this over the course of a year, the lifetime value, or over 5 years? I'm going to stay with annually. Let's just say the average customer, if you do all the math, is 1.2. Some customers will use you twice a year, some customers won't. So let's just say you land somewhere in the 1.2x. The reason why I'm using 1.2x, I think this is the LTV that Xavier came up with. I could be wrong, but you could figure this out. If you have more commercial contracts, your LTV is going to be higher. If you go for commercial contracts and you go for apartment buildings, you go for shopping centers and parking lots that have overflown dumpsters and they bring you weekly and you can rack up your commercial contracts, you could bump up your LTV. But if we do the 400 example, we know our LTV of the customer is going to be 480. That's our lifetime value. And this is where you guys need to get creative. How can you crank up your LTV? How can you crank down your CAC? How can you crank up your AJS? I hope this helps a lot, guys. I just made a few notes and I'm kind of freestyling. I freestyle all my videos because I'm so cool. Just kidding. Since we talk accounting and we touched into like a little bit of investing terms with venture capital and raising money from Series A and LTV and stuff, I kind of want to go over just a couple other words. We have other acronyms: ROI, ROAS. We all know return on investment. I just wanted to talk about return on investment because some people might not have heard the term, but this is probably the most basic. Everybody knows, hey, if I put in $20,000, how much am I going to get back? Return on investment, as simple as that. ROAS takes that one step further. Return on ad spend. This is just a good metric to have so you know, okay, if I put in 20K into Google, I get on average 80K back, 4x. And guys, what I want to tell you is some numbers to shoot for real quick. On your ROAS, you want to shoot for a 3x. Minimum, on a good month, 5x. So 20 should bring you 60 minimum. You're shooting for 100. And that's all on your close rate on the phone. That's all on your close rate in person. That's all in your upsells, your bravado, your chariz, your riz, all that stuff. And let's talk about what I think you should track monthly. First of all, as you guys saw, everything we went over, you need to start tracking your shit. Separate phone number for Facebook. If you're doing message leads on Facebook, you need to be on top of that. If you close a message lead through Facebook and you go put it into your CRM, like Dispatch that I'm launching next month, you need to track that as a Facebook lead so that you can run your CAC for Facebook. When you start running paid ads on Facebook, if you're getting free leads from social media, still track it. Track everything. Separate numbers for everything so you can make sure you can hear the phone calls and the email leads and you know exactly where they're coming from. So every month, guys, I want you to do your P&L. So P&L is just so you can have your P&L, okay? If you ever want to sell your business in the future, you just want to have the health of your business, you have to profit and loss, have a bookkeeper do it if you don't want to learn how to do a P&L. Or just use mine. It's definitely not an accountant style P&L, but it's good enough so you can see your numbers every single day. It's free, customize it, do whatever. At the end of the month, you are going to calculate your average job size. If you're running Google ads, you need to know your CPL / and Google, they're called conversions, okay? Conversion tracking. You need to know your cost per conversion, which then brings you down to be able to get your CAC. You need to do this every month. My software does it all. We're in alpha, beta, but we'll get to that later, okay? You need to know your ROAS. It's just general, you just wanna know 20 in, 80K gross back. It's really hard to stay on top of this if you don't have a VA, unless you're not getting a lot of calls in the beginning. But when you actually start like getting busy, it does make it a little bit harder, but you wanna track the amount of calls. Just in general, it's just good to know your close rate. So you get 10 calls a day and you close 5, okay? You know, this is all of your calls coming in, right? but your CAC and CPL is for Google Ads. You need to break this down separately, but it's nice to know, hey, I get 10 phone calls a day, I'm closing 50%. So at the end of the month, you average it out. You need to average out over the month, not daily, not weekly, not bi-weekly. I do the P&L daily just because I need to see how much money I'm making every single day. That's what I like. And then also repeat customers, guys. Track your repeat customers for the month. Track it daily, but add it all up in the month. And then you can get your LTV. Don't forget your LTV. Get these numbers, guys. Do this monthly. You will win. That was a lot. I feel like I've been standing here forever teaching. I want to remind you guys that I'm still just learning this shit too. Yes, I've been in the business for 2 years and 4 months now. This is what I've learned. I hope you guys have learned something. I hope that inspired you, motivated you, anything. If you have any questions at all, please leave it in the comments. That would really help me out. It lets me know that you like the content I'm putting out. So please like, comment, subscribe. If you have questions, ask. If I got anything wrong, it's very possible. My brain kind of hurts right now. Leave it in the comments down below. As always, I leave you with this. Success is often covered in dirt, but so is gold at one point. Toodles! Whoosh. Let's tell you my story real quick. I've always been a software engineer my entire life. I started programming when I was 10 years old, but I started with HTML on AOL 3.0, and they would teach you basic HTML tags. So I was learning this shit at 10 or 11 years old. Then I just slowly progressed and started building more websites, learning PHP, learning databases like MySQL and all that stuff. The last app that I was working on was a travel app. I raised $150,000 from investors, and that was actually right before COVID hit. It was a travel app meant to travel with friends across the world, the globe, and they didn't even want you to hang out with your family. I kept telling the investors, it's gotta go away someday. I have the app semi-ready to go. You know, we wanted to start doing beta testing, but nobody wanted to fly, let alone pay for this new experimental travel app that I was trying to show to the world. Me and my lady had our second kid, newborn, and we're burning down to our last few $1,000s. And it's getting to a point where I'm like, we need money now. So one of my friends I was talking to, he's like, dude, I used to do junk removal. I looked into it, I Googled it, I found Sonoma Strong, $1,000 a day, Steve Conroy, $1,000 a day, $2,000 a day, and I was like, $1,000 a day. Started with Thumbtack, started with Craigslist, got to Google Ads probably by month 1 or like the end of month 1, month 2, I think. Went from 200 a day to 500 a day to 1,000 a day. From there, it's just been incredible. This is a great industry. If you're stuck and you need to figure out how to make some extra money, you can grow this into a very profitable business. You can do very well for yourself. I'm doing very well for myself. It takes a lot of work outside of the labor part, the marketing part, the hiring part. Everything is hard. It has potential. It is a very easy-ish, predictable path to make money. The service industry is so much easier to get into because it requires just your time, and everybody's gonna need this service, okay? You trade your time for money. It doesn't matter if it's landscaping, moving, junk removal. There are so many home services that you can get into that don't require a skill. People need this home service. So getting into the services business is a very safe, predictable, slow growth path, but very doable. That is the beautiful thing about junk removal. So guys, if you want to check out the course and you want your A to Z on how to build a junk removal business, check it out in the link below.